Good morning, good morning, good morning. Pinch punch, first of the month. It's July. No idea how that's happened, but we'll manage. I hope
Hello.
everyone had a good hello. I hope everyone had a
Ah,
good Q2, H1. You stop interrupting my intro, please. Hello, you there?
uh, I don't know. Can anyone hear me?
Yes, I can.
Ah, perfect. Sorry, I've had some trouble connecting this morning.
Well, you completely you completely shoulder barged into me intro, but yeah, great. Thanks, mate. Anyway,
Oh,
you're
well,
here.
you'll get over it.
Oh, probably. It's the Morning Blast, myself and Mr. Michael Brown, giving you a review of what's going on, a preview of today. You know how it works. Hopefully a smile, hopefully a bit of value. But before we do, I'll do the legals. As usual, nothing discussed on this basis session constitutes trading or investment advice or infers any kind of endorsement by PIQ. That of myself, Mr. Ryan Paisley Esquire, and Mr. Brown Shoes, Mr. Michael Brown.
Well, very good morning to you, Ryan. Now I'm properly into this call, and good morning, everyone, as well. The start of the second half of the year, and
I've
the
already done that. I've already
well,
done
I was
that.
going to say, and the continuation of the heat wave here in London.
Oh, God, it's hotter than yesterday.
Oh, it's grim. It's absolutely
Are you in
grim.
the office?
I am. I've soldiered in on a
I'm getting the
non-air
impression.
conditioned train.
I'm getting the impression though that you're only in the office because it has aircon. Otherwise, you'd be in the garden.
Well, I was thinking I might sleep here, to be honest, tonight.
That would fit your that would fit the remit. Yeah. Um, I'm genuinely considering about getting down the pub to be honest and getting a cider in me. But anyway, we got to move on. What's been occurring?
The Somerset inside you is coming out there, isn't it?
Hey, love that come in cider.
Oh, oh God.
It's a real brand of cider.
Moving on very swiftly indeed. Where are we this morning? Well, very much a case of more of the same for financial markets yesterday, with equities continuing to gain ground, the S&P and the Nasdaq, both adding about 0.5% and both trading to fresh record highs. Very much more of the same elsewhere as well, with treasuries continuing to gain ground across the curve, the 10-year yield falling to around 4.23%, its lowest level since early May, while the 30-year yield slipped about 5 basis points on the day. And the dollar continued to face headwinds against most G10 peers, with the dollar index remaining south of the 97 figure. The euro trading to fresh cycle highs north of 118 overnight, and cable continuing to trade north of 137, with the Aussie and the Kiwi dollars the best performers on the day yesterday, up by around about 0.5% apiece, very much riding on the coattails of that equity market rally that I alluded to a moment ago. In terms of catalysts, there were plenty of trade headlines once more, very much noise ramping up on this front as we move increasingly closer to the expiration of the pause on Liberation Day tariffs next week. In fact, we are just a week away from that now. Firstly, Bloomberg citing sources noting that the European Union is apparently prepared to accept the baseline 10% tariff. The reason this is important is because there have been reporting last week that even the imposition of that 10% tariff would potentially trigger retaliatory action from the European Union. It looks, for the time being at least, as if that may not be the case. Nevertheless, despite EU leaders being prepared to accept an imbalance on that front, they are still seeking exemptions on various auto, car parts, steel and aluminium tariffs. So some negotiations still to be done on that front. Sticking with trade, there's so much to report on this front this morning. President Trump seems to have got quite angry with Japan, apparently complaining that Japan doesn't, despite having rice shortages in Japan does not want to buy US rice. I mean, I think that would be the ultimate humiliation for anyone in
Well,
charge in Japan, having to buy rice from America.
can I so the bizarre thing here is that Japan have actually been buying US rice, but it's just been going under the radar. Um,
But what the hell's he moaning about then?
Well, this is it. And why is Japan still kicking up a huff? But but apparently there has been some US exports to Japan. I'll see if I can dig out the tweet that had all the data on it. But it was quite a significant amount of their shortfall they've already bought from the US. But
Oh, right.
yeah, but I
Hmm.
think it sounds to me like the Japanese don't really want to. They don't really want to publicize that because obviously it's great shame on the country,
Yeah.
and also. Yeah, it's a very bizarre one, but yeah, from the latest data I've seen, export data, they have actually been buying some rice, so it's all a bit bizarre. It feels to me
Oh,
that maybe
right.
Japan might be cutting their nose to spite their face a little bit here, but they are one for a tradition and all that stuff.
Yes, very much so. Well, in any case, whether or not they're buying it, clearly Trump isn't aware of them buying it, or they're not buying enough, because he's decided that he will now send Japan a letter on tariffs and tell them how
Is
much
he
they
going to
need
write
to
it on
pay.
rice paper?
Oh dear. Well, let's just hope there's a grain of truth in what he's saying at the very least.
Hey! Da, 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 la, la, da, 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 la, la, da, da, da.
Sticking with Japan, actually, we did hear reports, although importantly, this broke before those comments from President Trump. We did hear reports that Japanese PM Ishiba is considering whether or not Japan should agree with President Trump's suggestion that Japan should increase purchases of US oil. Of course, we have, and you've rightly mentioned many a time in the past, Ryan, that one of the easiest ways to get trade deficits narrowed is to just purchase commodities, whether it be oil or LNG. And it seems like more and more countries are going to be going down that route. A couple of other things on trade. The White House press secretary, Caroline Leavitt, she was speaking yesterday saying that Trump is going to be meeting with his trade team this week to set tariff rates for those countries that don't negotiate. We'll see whether or not that comes to fruition. I mean, they've said this so many times now.
Yeah,
It's always 2 weeks away, as we were saying yesterday. We also have from Treasury Secretary Bessent, who was saying that there's going to be a flurry of trade deals in the final week. White House economic advisor Kevin Hassett was saying a very, very similar thing yesterday. But there has been reporting overnight via the FT that sources close to the Trump administration are saying that the admin are scaling back their ambitions for trade deals by July the 9th. This basically comes back to what we were saying yesterday, that you are not going to get a comprehensive trade agreement done in a week. What you are more likely to get is a promise or a memorandum of understanding to basically promise to negotiate further on certain things and make various purchase commitments in the meantime. And it seems like finally the Trump administration is coming round to that idea. And that is likely to, for most countries at least, who manage to agree those memoranda, that is likely to prevent the imposition of those
yeah.
Liberation
It,
Day
it's
tariffs.
it feels like deals have become frameworks very quickly.
Yes, absolutely. But don't forget that, these are going to be the biggest and the most beautiful and the most comprehensive frameworks that anyone anywhere has ever seen. And the US is just winning so much at the moment that, we're going to get tired of winning, frankly, I think.
Yeah, well, look, to be fair, it's the story of my life. Just too much winning.
Is it?
That wasn't meant to
Right.
be that funny, but yeah, thanks.
Sorry, you tickled me there. Moving on.
Hey,
Oh dear. Moving on from
maybe
the.
I'll get some Dick Insider for you.
Oh God. Moving on from
Another
that.
another real brand, another real brand. I'm
Yeah,
here all week.
Ryan's got all yokel on us now. Moving on
Okay, darling.
from the trade front to yesterday's data, we did have the latest inflation figures out of Germany, where CPI rose by 2% on a year-on-year basis in June, down from the 2.1% prior and below the 2.2% consensus. A little bit soft actually, and that does run against the hotter than expected prints that we had out of France and Spain on Friday, and that of course comes ahead of the Eurozone-wide figure that we get at 10 o'clock this morning. Other bits and bobs from yesterday, President Trump deciding to bash the Fed yet again. Interestingly though, now seemingly turning his ire towards the entirety of the Fed board and not just Jay Powell. He said, and I quote, "Jerome Too Late Powell and his entire board should be ashamed of themselves for allowing this to happen to the United States. They have one of the easiest yet most prestigious jobs in America, and they have failed and continue to do so. If they were doing their job properly, our country would be saving trillions of dollars in interest cost. The board just sits there and watches, so they are equally to blame." And then he reiterated his call that they should be paying an interest rate of 1% or better, which comes back to what we were saying yesterday, whereby we'll probably be calling for negative rates by the end of this week. Two things to add to that. Trump also sent, and do go and find a picture of it if you haven't seen it already, he sent a handwritten scrawl to Jay Powell, which was essentially a chart of global interest interest rates, saying we should be at the top near Switzerland rather than at the bottom, once again demonstrating that President Trump doesn't actually know how interest rates work. And secondly, I would imagine that we're now going to see Governors Bowman and Waller turn back to being hawks again, because judging
Yeah.
by Trump's tweet there, they're probably not in the running for the top job. And it seems like their politically motivated pivot has left them with egg on their faces. And I'm jolly glad to see that, to be completely honest with you, because what they
Yeah,
did last week
exactly.
was utterly, utterly shameless.
Exactly that. Exactly that.
Moving away from the Fed, but sticking with monetary policy, the ECB, they unveiled their strategy review yesterday. What a boring document that was. They confirmed that their inflation target is a symmetric 2% goal over the medium term, and reaffirmed that all of their tools remain in their toolkit. Mark your diaries, because they're going to conduct their next strategy assessment in 2030, which I'm sure we are all absolutely bursting with excitement for the conclusions
Oh
of
yeah.
that one. Here in the UK, news via the FT yesterday that Rachel Reeves is reportedly set to cut the cash ISA allowance. Now, to be clear, this would not affect the stocks and shares ISA, where the threshold is likely to stay at 20,000. Is likely only to be a lowering of the cash ISA threshold. I think this is an absolutely ridiculous idea, to be completely honest with you. To be fair, it is a very noble aim, what the government are trying to do, which is encourage investment, particularly in the UK equity market. But the way to do that is not by penalising people for holding
Right.
cash. The
Exactly.
way to do that
Exactly
is
that.
to incentivise investment in the market, and also foster a positive market environment.
Right. So,
Sorry, just to finish, there are
sorry, go
very
on, go on,
good
go on.
reasons why someone may want to have a cash ISA. My grandmother, for
Yeah.
example, is not at 81 years old going to be investing a particularly large
Still a looker.
allocation of her portfolio into the equity market, and she should not be penalised for being 81. And if you're saving for a house deposit, or you want an emergency fund, or whatever it may be,
Yeah.
there are very, very good reasons that the cash ISA exists. The way to improve the performance of the equity market here in the UK, as we've said before, it's not to force people to invest in it. It's not to
Yes.
penalise other means of holding funds. One of the best things that she could do, get rid of stamp duty on share purchases. That would improve
Yeah.
liquidity in an instant. But
Yeah.
no, instead the government have made yet another nonsensical decision, it would seem.
I'm glad you said that, because that was going to be my rant today. And what's really fucked me off, and I don't apologise for swearing, it's my show, fuck 'em, is the mugs out there going, oh, you don't understand, they're only cutting the cash ISA limits. Well, this is going to be good. It's not. It's not, because do you think the people that put money in cash ISAs are now going to go, oh, I can't, my limit's cut, oh, I'm now going to pump it into
No,
equities?
of
They're
course
not.
not.
It's a completely different mentality. And as you said very correctly, as usual, my dear friend, what we need to do is we need to be promoting the investment into equities, and kind of nurturing the mentality needed that that the US clearly has and we clearly don't. And there's very easy ways to do that, and it's removing the barriers to entry. It's not sticking up, no, it's not restricting people like we saw this I want to say 4 months ago, but time is just in a complete abstract to me recently, when we saw headlines where Rachel Reeves is considering basically forcing insurers and whatnot to invest in X amount of their portfolio into UK equities.
Yes,
As
that's
soon as
right.
you start forcing people into doing stuff, or as soon as you try and start corralling people into doing a certain thing, it's all going to fall apart. They need to want to do it. The reason why 401ks, etc., are so successful is because Americans love to invest that way, because they've made it very easy for them to do so, and they don't penalise them in any way, such as stamp duty, etc. And do you know what? It's that kind of thing that's the root cause of why, when extrapolate that, my big word for me, at least a couple of syllables. Extrapolate that. That's this is inherent to why things like the LSEG and all that LSEG and are just shit. Because as a country, we have been so kind of well, for the majority of us, are so risk averse, and we don't see the offerings that are available because there's nothing there to encourage us. It needs to be kind of completely rethought, and unfortunately, this government are just backing us down a hole even further.
Yeah, I think you're
And
absolutely right.
and you know what's going to happen? There's going to be less investment in cash ISAs, and it'll probably lead to less investment in equities and stuff, because people are like, well, what's the point of me saving at all?
Well,
and they'll lump the two together.
yeah, I mean, I can tell you exactly what's going to happen. As you rightly alluded to, there is a need to change the culture and the thinking around investing in the UK.
Yes.
The way to do that is not by making changes to the tax system. The way to do that is through a program of education. And as you rightly said, all that will happen is, people who would have previously thrown X amount into a cash ISA are instead going to put that into a regular common or garden savings account and end up being clobbered for the interest in terms of tax.
Yeah.
So
Yeah. No,
actually,
exactly
all
that.
we're doing is penalising saving and not doing anything to encourage investing. So we are very much shooting ourselves in the foot with that one. The other last point I would make on this before I just move on is this comes back to a sort of intangible point that I think I made after the budget last
Oh,
year,
good ones.
where there's various sort of unwritten rules and gentlemen's agreements when it comes to financial planning in the UK. One of those was the lifetime limit on pensions. Another one was it's kind of always been accepted that you're just going to be able to throw 20 grand in an ISA and do what you want with it. The fact that the government keep tinkering with this sort of stuff, they are, don't get me wrong, well within their rights to change this as and when they see fit. They are the government of the day. But the problem with doing so is it just erodes the credibility of these so-called longer term measures. And it
Yeah.
also erodes investor confidence because you're effectively saying, okay, well, I'm sat here with, an IFA or whoever it may be saying, I'm going to put various structures in place and this is going to be my plan over the next 10 years. And then in 6 months time, Rachel Reeves stands up at the dispatch box and you've got to tear the whole thing up. So it means that it's
Yeah.
much more difficult for people to actually plan for their financial futures. So not only are we doing nothing to encourage investment, we're also actually discouraging people from taking those financial planning decisions because it's going to mean that those plans are much less durable than they have been in the past. But anyway, I think that's probably enough of a rant on that one. I do have a few other things
Yeah.
to mention this morning because I could go on all day about that one.
I would apologise to our listeners, but I needed to get it off my chest. So again, not sorry for swearing, not sorry for ranting.
No, absolutely not. The other things I just want to mention very briefly is the ECB's annual conference in Sintra is getting underway today. I mean, it's like a sort of Ryanair version of Jackson Hole, effectively. We have heard of
Jackson Hole when you order it. Jackson Hole via Timo's.
yeah, sort of the Benidorm edition. We have heard from a whole host of ECB speakers this morning. I'm not going to go through all of their comments. What's most interesting, though, is that pretty much all of them have given the green light to further gains in the euro. Of course, euro dollar trading at 118 this morning. Vice President de Guindos did say that they might get a little bit more worried if we go north of 120. Guess where the market's going to take the euro now? He said that. We've
Yeah.
also heard from Bank of England Governor Andrew Bailey this morning. He said that the Bank of England need to watch for inflation persistence and that the question for the BOE is whether labour market softness is going to come through. Well, Mr. Bailey, we lost 109,000 jobs from the economy in May. The PMIs point to an even greater pace of job losses in June. Is that not sign that the labour market softness is already here? I think Bailey continues to bury his head in the sand on that front. And
And
lastly,
it's quite a big head as well.
oh God. And
Oh,
lastly,
no, he is. He has got quite a big
well,
head.
he is a big man. Actually, on that note,
Oh, yeah, I'll take your word for it.
Augustine Carstens left the Bank of International Settlements
Speaking of big
yesterday.
men.
Yeah, sorry. That just reminded me. The big man has left the building there. Lastly, a couple of tech headlines just to finish up. Apple, both of these for Apple, actually. Firstly, the Wall Street Journal reporting that they are going to delay the rollout of certain features in the European Union because of various regulatory hurdles that the EU has imposed. So another win for Europe there. And lastly, Bloomberg citing sources noting yesterday that Apple is basically looking to potentially give up on AI and use an outside source in order to, quote, fix Siri in what would be a major reversal for the firm. Of course, they've been trying to build their own models and it's just gone terribly wrong and they don't seem to
Oh,
have actually made any progress. So they are now looking
go
at
on.
potentially using AI technology from either OpenAI or from Anthropic in order to power a new version of Siri. So we'll see how that one develops.
I don't know why I'm asking, but have you ever used Siri?
Only by mistake.
Oh, so you're one up on me because I've never even used it by mistake. But anyway, Michael, thank you for that. So just cracking on with some choice headlines from the overnight news roundup, courtesy of the wonderful Zach Eisman. Give Zach a follow. There he is. You can see him on the list of people that are listening. Do subscribe to the Overnight News Roundup Substack as well. It's the best way to keep up to date with the overnight headlines. But starting off in trade, FT Sources reports Trump's top officials are scaling back their ambitions for comprehensive reciprocal deals with foreign countries by July 9th, seeking narrower agreements to avert the looming reimposition of US tariffs. Administration is also considering imposing tariffs on critical sectors. FT again, sources report India is on track to seal an interim trade agreement with the US as soon as this week, where the deal would be an initial step towards a comprehensive bilateral accord, with both sides saying they would seek to finalise the first tranche of the full agreement by the autumn. So again, ties in with exactly what myself and Michael were saying this morning. This deadline for deals seems to be getting a bit the black and white of this is very much grey at the moment. Japan's chief cabinet secretary Hayashi said that Japan will not sacrifice its farmers to secure tariff exemptions from the US. Italy, they will increase its imports of US soybeans as part of the new effort to rebalance trade between the two countries. US Agricultural Secretary Rollins told reporters Monday after meeting her Italian counterpart. In macro news, some headlines from here. Tesla shares are under pressure after Trump posted on Truth Social, and I quote, doing air quotes that no one can see, I don't know why I'm doing that. Elon Musk knew long before he so strongly endorsed me for president that I was strongly against the EV mandate without subsidies. Elon would probably have to close up shop and head back to South Africa, unquote. Trump suggested that the DOGE should look into subsidies across rocket launches, satellites, or electric car production. So very much taking aim at Trump. To be fair, I make Trump right. Everyone knew that Trump. I make Trump right. Everyone knew that he's always been against EVs. He's always been pro gas guzzling and stuff. So what Musk thought he was getting out of this, I do not know. Maybe it's just his autism kicking into upper gear. Large Japanese manufacturers became slightly more optimistic about their business conditions in the second quarter, despite tariff concerns, reviving rate hike expectations. That's according to the Wall Street Journal. Kiteskin, the Chinese PMI, a private gauge of China's manufacturing activity, that bounced back into expansionary territory in June to 50.4 versus an expected of 49. Previously, it was 48.3. As a temporary trade truce between Beijing and Washington eased some pressures on Chinese factories. That's according to the Wall Street Journal. China's resale home prices, they fell at a faster pace in June, highlighting the persistent weakness in the crisis-hit property market, despite a slew of policy support measures. A private survey showed that was in Reuters. South Korea's exports, they rebounded in June largely on brisk semiconductor shipments, indicating resilience despite challenges from higher US tariffs weighing on global trade. UK house prices, they fell by 0.8% in June, a sharper fall than forecast, and the biggest monthly decline in more than 2 years as a discount on property transactions ended. That's according to Nationwide, the bank, what we call in Nationwide these days. They still
They're technically a building society, but
they still are, right?
yeah.
Yes, so the Nationwide Building Society data showed, and that's in Reuters. Geopolitics, just the one headline from here worth shouting about. Israeli PM Netanyahu is expected to meet President Trump at the White House on July 7th. That's according to Israeli and US officials cited by Bloomberg. And finally, from me, some equity news before I hand back to the big man. Amazon, not Carson's big start, but big enough for me. Oi, oi.
Oh,
Oh God, move on. Amazon is on the cusp of using more robots than humans in its warehouses. That's according to WSJ. Notes the e-commerce giant now counts more than 1 million of machines at its facilities. I assume when they say robots, I believe they mean, have you seen the videos of like the little kind of little go-karts, it feels like, with boxes on them, like whizzing around the factories?
those
I think
things.
that's what they mean. I think that's what they mean by robots, more than a Mr. Michael Brown. That's my robot impression for the day. Tesla,
Please don't do that again.
sorry. Tesla raised the price of its Model 3 long-range edition mid-size sedan electric car in China to 285,000 won. What's that in real money? That's about $39,784.47, according to
That's
Grok.
very precise.
The increase is of around $1,395. That's according to pricing information on the automaker's website. Chinese automakers continue to expand their European foothold in May, capturing the highest share ever of hybrid sales and the biggest slice of the electric vehicle market in 10 months. Here come the Chinese. Finally, for me, Wolfspeed Inc., a chip maker caught in Trump's push to reshape Biden-era tech subsidies. They filed for bankruptcy to enact a creditor-backed plan to slash $4.6 billion in debt. So a loser there. And that's it from me. Back to you in the
What was the company
air-conditioned
called?
studio. Wolfspeed.
Oh, right. Their shareholders will be howling about that one, won't they?
Oh, I walked into that one. Oh, what a cunt. Oh, no. Oh, God. Right, I'm ending the show. Fuck it. Right, go on, carry on. I'm off to have a quiet word with myself. Oh,
I'm
devastated.
quite pleased with that.
Devastated.
Right.
Move on quickly.
Oh dear. In terms of today then, in 5 minutes time, we have final manufacturing PMI figures due from the Eurozone. That's expected unrevised at 49.4. And then at the bottom of the hour, we have final manufacturing data from the UK, which is expected unrevised at 47.7. Things do get a little bit more interesting after that. At 10 o'clock this morning, we have the latest flash inflation data out of the Eurozone. Headline CPI, that's seen rising to 2% on a year-on-year basis in June, up from the 1.9% that we saw in the month of May. Core inflation, though, that should hold steady at 2.3%. And then into the US session this afternoon, both of these releases coming up at 3 o'clock London time. We have the latest ISM manufacturing PMI number. That's expected basically unchanged at 48.7 in June, up from a prior 48.5. Although, of course, attention will also be paid to the employment sub-index ahead of the jobs report on Thursday. And also at 3, we get the latest JOLTS job openings data. This data does reference May, so it is a little bit stale, but given the extra attention that has been on the labour market of late, it will attract plenty of focus. Job openings seen at 7.3 million in May. That would be down from the prior 7.391 million. Just a note on job openings, actually, the JOLTS survey that pertains to the labour market on the last working day of the month in question. The BLS non-farm payrolls numbers and the household survey that pertains to the labour market in the week containing the 12th of the month. The reason why I mentioned that is because of course, in May, the US-China trade truce, that only went into effect on the 12th of May. So that's likely to have had more of a positive impact on the JOLTS data than it would have done on the non-farm payroll series. So just bear that one in mind. And the other thing to, of course, keep in mind today, as well as any potential trade and geopolitical developments, is the ECB's central banking forum in Sintra. There's a lot going on there, so I won't go through it all, but the sort of standout event is a panel discussion at 2:30 this afternoon, London time. That panel will feature Fed Chair Jerome Powell, ECB President Christine Lagarde, BOE Governor Andrew Bailey, and BOJ Governor Ueda, who will all be on stage together. So a bit of a sort of big beasts of central banking mid-afternoon. And for the time being, that is all from me this morning.
Well, considering we've had a couple of lengthy rants,
We've
I think
done
we've done
very
very
well
well
with
to keep this
time,
on.
yes.
Yeah, no, exactly that. We're getting more polished as well. I wouldn't say more
Well,
polished. I
yeah,
dropped
come
the
on,
C.
let's
I said fucking cunt today. This is hardly
let's
polished,
not
is
go to
it?
extremes.
And also quite a fantastic robot impression, if I do say myself. But anyway, right, moving on. Michael, thank you for being wonderful as usual. Listeners, we really do appreciate you. Thank you so much for tuning in. Tell your friends, tell your parents, etc., etc. Whatever you're doing today, keep it tight. If you are in the UK, stay cool because it's fucking hot. Yeah, and we'll see you all tomorrow. Take care. Much love.
Bye for now.